Hello everyone. Brent crude has fallen sharply towards $72 per barrel mark, and this decline is more than just an energy market story. For India, it is becoming a major foreign exchange story with important implications for the rupee and the USDINR outlook. Brent crude has fallen to multi-month low as geopolitical risks in Middle East have eased and concerns over supply disruption through the Strait of Hormuz has faded. Expectations of ample global supply and softer demand have further reinforced the bearish outlook. Adding to the sentiment, a report has projected Brent crude to fall towards $60 per barrel by the end of year. For India, this is significant macroeconomic development as the world's third largest crude importer, India imports nearly 85% of its oil requirements. Lower crude prices reduce the country's import bill, improving the trade balance and helping narrow the current account deficit. At the same time, softer energy costs moderate imported inflation, strengthening the India's overall macroeconomic fundamentals. Lower oil import payments reduce the demand of US dollar for the oil marketing companies, easing the structural pressure on the Indian rupee. This has helped USDINR remain anchored near the 95.30 region for a week before falling below 95 today, despite a relatively firm US dollar index and relative elevated US Treasury yields. From market perspective, the Brent continued to trade below $75 per barrel. The rupee is likely to remain supported through improved foreign exchange flows and reduced need of RBI intervention. However, the broader USDINR outlook will still depend on US interest rate, global capital flows, and overall risk sentiment. Technically, Brent crude is consolidating around $72 per barrel after a sharp correction. While the broader trend remains bearish below the 25-day EMA at 80, strong support near 71-73 may limit immediate downside. Unless fresh geopolitical risk emerge, crude is likely to remain range-bound with a bearish bias. So, Brent decline is reshaping India's imported inflation profile and improving the country's internal position, while crude prices alone will not determine the direction of USDINR. Sustained lower oil prices remain a structural positive for the Indian rupee and could keep USDINR range bound with a mild downside bias. Thank you.